Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on profit and equities. Now, in one of our previous videos, we had showed you a list of small cap stocks which Ambit Capital believes could be 10 baggers over the longer term. Continuing with the series, we today provide to you 5 large cap stocks from the same report which Ambit Capital has put forward as future 10 baggers for the longer term. Please watch this video to know more. Now the first stock on the list is Kansai Nerolac Paints Limited, which is available at Rs 451.40 and the face value for it is 1. The symbol for it is KANSAINER. Now Kansai Nerolac Paints Limited is a paint company. Now, as is evident from the 1-year chart, the company has not really done much and has largely been flat throughout the entire year. The EPS of 8.91 translates into an expensive price to earnings ratio of 50.66 when viewed standalone. However, when viewed in comparison to its industry PE of 60.08, it's still cheap. The company also has an expensive price to book ratio of 7.78. The debt to equity is on the lower side at 0.0581, whereas the return on equity is 0.2495 and is a fabulous number. The company has a dividend yield of 0.58%, whereas the promoter holding is another very strong factor and stands at 74.99%. Also, none of it is pledged. Now the second stock on the list is 3M India Limited, which is available at Rs 20,908.85 and the face value for it is 10. The symbol for it is 3MINDIA. Now, as is evident from the 1-year chart, the company has been choppy and no major wealth has been created here. The company is a large cap with a market capitalization of 23,553.97 crores. The EPS of 317.70 translates into an expensive price to earnings ratio of 65.81 when compared with the industry PE of 28.24. The price to book ratio of 15.33 is also very high. The company did not pay out any dividends, whereas the promoter holding is a strong number and stands at 75%. None of the promoters holding is pledged. Now the next stock on the list is Britannia Industries Limited, which is available at Rs 2,858.35 and the face value for it is 1. The symbol for it is BRITANNIA. Now Britannia Industries Limited is a food company which is engaged in the manufacture of biscuits, cakes and rusks. The company operates through the food segment, which comprises bakery and dairy products. Now, as is evident from the 1-year chart, the company was on an uptrend for the majority of the year, then had a correction. However, it again resumed its uptrend. Over the last few days, however, it has again corrected. The company has a market cap of 68,691.38 crores, which means that the company is a large cap one. The EPS of 44.82 translates into an expensive price to earnings ratio of 63.77 when viewed standalone. However, when viewed with its industry PE, it's still reasonable. The company has a price to book ratio which is again expensive at 21.23 times and the dividend yield percent is 0.44. The company's promoter holding is also average at 50.66%. None of the promoters holding is pledged here as well. Now the fourth stock on the list is Avenue Supermarts, which is available at Rs 1,464.30 and the face value for it is 10. The symbol for it is DMART. Now Avenue Supermarts Limited is an India-based company which owns and operates the DMart chain of retail stores. Now, as is evident from the 1-year chart, the company since listing had a dream run. However, after that there was some sort of a correction. It has been choppy since. The market capitalization of 91,384.69 crores translates into a large cap market capitalization. The EPS of 14.43 translates into a very expensive price to earnings ratio of 101.48 when viewed standalone. However, when viewed with respect to its industry PE of 136.32, it still appears cheap. The company has a price to book ratio of 19.68, which is also very expensive, whereas the debt to equity is 0.4227. The company did not pay out any dividends and the promoter holding is a very strong number at 81.20%. Now the final stock on the list is Maruti Suzuki India, which is available at Rs 6,930.05 and the face value for it is 5. The symbol for it is MARUTI. Now Maruti Suzuki India Limited is a holding company engaged in the manufacture, purchase and sale of motor vehicles, components and spare parts. The other activities of the company comprise facilitation of pre-owned car sales, fleet management and car financing. Now, as is evident from the 1-year chart, the company seemed to fall off a cliff towards the middle of the year and has been a laggard ever since. Now looking at the valuations, the company's EPS of 251.16 translates into a price to earnings ratio of 27.59, which is slightly more expensive when compared with the industry PE of 23.98. The price to book ratio of 5.01 is also slightly on the high side. The company has a dividend yield of 1.15%, whereas the promoter holding is slightly above average at 56.21%. None of the promoters' holding is pledged. Now friends, having seen these stocks, there appears to be a common thread, which is that these stocks are richly valued. However, the growth that they could potentially offer could also be higher. This could probably be the reason why Ambit seems to think that these could be 10 baggers over the longer term. Now friends, please don't consider these to be recommendations on our part. Please don't blindly buy these stocks. Do your own research. This and all other content that you see on our channel is intended to be a piece of news. Also friends, if you like the content that you see on our channel, please don't forget to share these videos. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.